Keystone Realtors is the stock on our radar. Collections have jumped 70% this time at almost 600 crore rupees in Q2. But pre-sales volume and value contracted sharply. For the first half, though, the company has seen almost a 15% growth in their pre-sales, and the company has completed 5 projects with a construction area of 3.1 million square feet. And they remain confident about their guidance for pre-sales growth as well. To discuss this and the demand trends, Boman Rustom, Irani, who is the chairman and managing director of Keystone Realtors, is with us. Boman, thanks a lot for joining us. As always, it's a pleasure having you here on the channel. I want to start by asking you about what happened in Q2, right? Because if you look at just the quarter, I understand in the first half of the year you've done a growth of 15% in pre-sales, but just in Q2, you've seen a sales decline both quarter-on-quarter and year-on-year. Can you tell us what led to this? Is there some moderation in demand that you're noticing? And what is the outlook for the full year?
Quite honestly, thank you, first of all, for having me on the show. The first half of the year has been extremely good. We would have actually galloped a little more, but it's nothing to do with the demand at this moment in time. Our project launch, which was due to be in this quarter, got slightly delayed because of certain approval processes, and we're looking at launching it now. So we will actually more than make up for what we've lost in terms of time. But yes, that is what led to some amount of decrease in our pre-sales in the Q2.
Hi, Boman. Good to have you on the show. Well, the first half of the year, the pre-sales numbers is around 805 crores approximately. And for the year, you were guiding close to around 1,800 crores. So you're telling us the second half of the year will be good enough and you'll hit that 1,800 crore mark?
Let us just see how sales normally take place. This is the quarter in which you will see a huge festive demand coming in. And that will lead to a great amount of sales taking place, not only at our end, but across real estate developments in various parts of the country as well. And we are very, very hopeful that our new launches, which are there in the pipeline, which, like I mentioned, one of them got delayed in this quarter, will have us having an excellent quarter coming ahead of us, as well as the last quarter of the year. Also, we have some interesting launches, which will allow us to kind of hopefully supersede our guidance. Our acquisitions as such, which I should stress upon, we've crossed the guidance for the entire year in the first 6 months itself. And more importantly, Nigel, is the diversity of the acquisitions that we've had. I mentioned previously across time that we try and replenish about 1.5 times of the stock that we are selling in any particular market. And this time our focus is on mid-mass and aspirational. Just to give you an idea, that is between 1 and 7 crore rupee price points, which makes our acquisitions in this first half of the year extremely important and good in keeping with our philosophy of increasing our supply in this market, which is probably the strongest market for Mumbai and MMR.
Right. Mr. Irani, hi, good morning. Prashant here. We had a real estate analyst with us a little earlier as well. He was saying that while volumes perhaps will be good because builders have found the sweet spot. I mean, they're not being too aggressive with price increases, etc. So things should be good. But just, talk to us about whether, is there a risk of, developers, especially in markets like Mumbai, etc., overdoing it? I mean, I'm not talking about you, but I'm saying, taking on, buying land in anticipation of demand continuing for a while at the same steady level, or you think that is not there? We've seen that in the past. I mean, maybe 10 years, 15 years ago, or you think this time it's different?
So, Prashant, let me first start off by saying that as a developer, your blood group has to be positive, right? Be positive. And that is generally a trend we have seen in the past. I don't have a looking glass to tell you about the future, but yes, you are right. Sometimes the over positivity does get certain amount of developers. But as of today, quite honestly, the demand that at least across all the reports that we have seen, including what your analyst said, has been extremely strong, and the Mumbai market continues to grow because of the requirement of the demand for the upper end of the segment. We've seen premium and super premium sell like never before. People are investing in real estate because of the transparency that the sector has brought. Real estate has always been something that's very interesting for most asset classes. But as of right now, we are seeing a very strong trend of investments in real estate, which was earlier more, to a very select group of people. Further, I think across the types of launches that we are undertaking, especially like I mentioned in the mid-mass and the aspirational, again, 1 to 7 crore, which all reports will show you, Prashant, are the largest possible market for Mumbai MMR. You will see across the western suburbs our launches coming up. You will see certain key pockets in the eastern suburbs, our launches coming up. And 1 or 2 of the unexplored by recognized real estate developers, markets where the infrastructure growth has taken place at the same point of time are located beautifully on the Mumbai map coming up. And you will see that in the coming quarter with one of the launches that we have planned.
Boman, just trying to understand what the next 2 to 3 years will look like for the real estate sector in the Mumbai MMR region, right? Because you have so much infrastructure that's coming up, whether it's the Coastal Road project, whether it's the monorail, the Trans Harbour line, etc. Which are the micro markets that will assume importance and will see a disproportionate growth, say over the next 12 to 18 months? And any areas that you're planning to get into?
So thanks for that question. First of all, MMR saw a 46% annual rise in housing sales, right? This is primarily because of the fact that the infrastructure boom that has taken place in this city makes us all, as citizens of Mumbai MMR, extremely confident about the future of this market. Secondly, areas where the infrastructure really has had a major demand booster is those locations that are sweetly situated along the coastline. At the same point of time, those that are very, very, well located in the center of the city. I can tell you, if I were looking, and we do look in these areas, Mahim Matunga Dadar will continue to be an extremely strong growing market. And Rustomji has been very, very, very clear that we will continue to work or grow our footprint in this market. At the same point of time, the western suburbs, because of the proximity to the sea, as well as the national park, the Borivali market, as well as the Malad, Kandivali, Goregaon market, will continue to be a strong growth driver for Rustomji because of the fact that in years to come, we'll have the coastal road reaching all the way up to Versova and then immediately up to Borivali and even beyond. I can tell you, if a company needs to look at huge growth, there are fantastic land parcels that one should look at, whether it is the Vasai-Virar region, and I'm talking of 10-year timelines, not 2-3. In the 2-3-year timeline, we should focus more on the western suburbs, as well as certain key markets in the center of the city, and that is exactly where Rustomji is strongly focused on. We're also very bullish on the Bandra car market, again, driven by the growth of commercial development in Worli at the same point of time in BKC area. Both make it extremely interesting because the commercial development is not only offices, but also a whole lot of lifestyle amenities are coming up in these areas. We've had the mall open up. We're going to have 2 hotels open up. We have an entire new slew of activities coming up with the hospitality as well as with the healthcare segment in this market. So again, Rustomji's strategy is driven more by research, data, and demand prediction in these areas.
Boman, I was listening into your analysis of the entire Mumbai market. I was hoping you'll mention Bandra at some point of time, so I think I'm located at the right place. Towards the fag end, you did mention that. But, everything comes at a price. Demand is good, luxury is selling, very good to hear. What about price increases? We had the management of Prestige Estates a couple of days ago, and they said they'll be happy if prices consolidate at these levels. Obviously, their average ticket as well as their average realizations are much lower than what you're selling at. But what do you believe in terms of price outlooks? How much have you increased prices? And do you think further price increases are there?
No. First of all, price increases is not what we look for because volume is the new, upside that we are looking at. All developers who are worth their salt are looking at better volume growth and better top line growth with maintaining a healthy bottom line. Having said that, Bandra continues to be a very choosy market, and our buyers in Bandra are looking at amenities, quality of lifestyle being created within the building itself. Of course, location continues to play a very important role, and one can never take away from certain key marquee locations, whether it be Mount Mary, whether it be Pali Hill, whether it be Bandstand or Carter Road. These continue to be extremely sought after locations. But overall, the Bandra markets will continue to hold price. They will continue to see good developers and developments coming. leading to a better overall development. And Nigel, as you know, that a whole host of hospitality usually drives growth in a particular area, and we've seen a new generation of I would say places where one can go across for a great meal and even just like a relaxed evening, leading to the growth in this area.
All right, Boman, we're running out of time a little bit, but if you could tell us, I think your holding is around 86% approximately. You have time to bring down the holding to around 75%. The markets are looking so good, both the stock markets as well as the real estate market. Would you consider, taking some money off the table, diluting some stake and moving towards the 75%? Or do you think there are better times ahead, so you'd rather hold on?
So, we are in the value generation, and at the same point of time, current money is the lifeline of our business. At the apt moment when we have the need, we will definitely go ahead and dilute. And yes, I have some runway ahead of me before which I can dilute. At the apt time, of course, we will dilute. I'm not sure about when you say money off the table means secondary, but we are more interested in growing the company. So a larger portion of it will be primary, and like I mentioned, Nigel, it will be more to do with when the opportunity does arise for us to make a largish investment. You will see us coming to the market again.
Okay, all right, Boman, appreciate your thoughts here. Thanks a lot for joining us on CNBC-TV18. All the best. You have a couple of new launches, the projects that you've launched in Virar, Thane, Juhu, Bandra. So, looking forward to all of that coming through and aiding your business. That's the word coming in from Keystone Realtors, a big mover. And, of course, 15% growth is what they announced in their pre-sales in the first half of the year. Let's slip into